Hello, guys. Um, Basically, what I'm seeing going on last week is that the markets caught a lot of companies were started buying back their shares last week, and the main reason for that, if you go over here on my other chart here, right here, the next 2 weeks we have blackout for 75% of the S&P 500 companies. They're not allowed to buy their shares back. So what happened this past week? I think a lot of these companies front end loaded their buyback programs, driving their share prices higher. And you can see the stocks. A lot of the stocks that had the best performance last week were the same ones buying back huge amounts of their shares. So keep that in mind, that the situation. So now we're going into the blackout period. So I actually think we're going to have a lot more volatility coming into the markets the next 2 weeks, and potentially chop sideways here for the foreseeable future. And what really got me right off the bat Monday morning, we saw this huge volume pre-market hitting Apple out of the blue for no apparent. There was an upgrade, but it's really, even with an upgrade, the volume coming into that, I think the company itself was buying back their own shares, driving price. And then later in the afternoon, they had a press release that came out from Apple, and boom, off to the moon we go with Apple. And so that was my first tell, and that wasn't the only one. There were multiple other situations throughout the week that suggested to me that we had a sustained company buyback program hitting the tape. And another thing you want to keep in mind coming into this week, if you bought on Friday, near the close of Friday, and you hold, and historically, if you hold to the end of this week, say they did a little study here, $100,000, that $100,000 just for that 1 week would be only worth $62,000 by the end of this next week. This historically, the week after quad witching is one of the worst weeks to be going long into the markets. So just keep that on your watch as a warning signal of a situation setting up this week. And so basically, I'm going to go through some of my charts I found, and we'll go from there. Basically, we have a broken long-term channel on our S&Ps. Okay, and yes, we can go up further the first of this week. We're not quite all the way up to a resistance area yet, but it's something to be concerned about going into this week, knowing that historically we typically have some relative weakness. We broke above this resistance area for this breakdown, but so far in the futures, we're already coming right back into that trend line. In the early, that's 924, futures are already open for the week, and we do have a sell-off back to this trend line already. And I think what we're going to do, you see how much resistance there was in here? I just cannot see us just taking off to the moon right here. It just doesn't, especially knowing that there's not going to be a lot of buybacks. So my theory is that we're going to chop around in here for the next 2 weeks, and maybe after, towards the end of that, then we'll take off to higher prices. I just do not like how the IWM is got so much relative weakness. I don't like how the diamonds look like they're breaking out of the primary channel this week, and there's just so many reasons I just don't. I'm not overly bullish this market. Okay, now from a consumer credit standpoint, it's not too bad right now on consumer credit. There's not a lot of delinquencies going on. Everybody's working. So yeah, the markets can go much higher, with the exception of student loans. Student loans are just nuts. So just that was another view I wanted to show with you guys. The DAX looks like it's trying to break out to the upside on the DAX, and that's great because the DAX is so considerably over. It's the most oversold area in the world, and relative strength in the DAX would be very positive. We do have an inverted head and shoulders pattern here. We are not officially broke out yet, but that is something to keep on our watch for our DAX. Okay, another view of our DAX. So just keep this on watch. It does look like that we could have a bid in our DAX, which could be a continuation bullish pattern for the U.S. markets. Okay, and then one last view of our EWG. You see this trend that's been going on. We bookended weeks on our DAX right here, suggesting, like I said, we have an inverted head and shoulders pattern going on here, suggesting that our DAX does want to catch a bid, which could actually mean money could rotate out of the U.S. markets. It doesn't necessarily mean the U.S. markets will go up with the DAX. Okay, just keep that in mind. Amazon is it's moving into a far loftier potential price pattern, and we are going into FedEx earnings Tuesday evening, and so we could actually see a relative breakout on Amazon even as early as tomorrow. We had above very good volume Friday, but that being OPEX, you can't read a whole lot into that. But this is something to keep on our watch, that Amazon is in that situation. Even though the Qs themselves are not showing relative breadth for the breakout, the FANG names are leading the Qs as of Friday. So keep that in mind. Another one I've got on watch, this is Xilinx, and I really think this thing here is setting up for a run to the 133, 135 area here in relatively short order. We do have, if you're using your log scale, this is a area that can move pretty darn quick once it does start moving. So keep that in mind. Lam Research got rejected Friday, and this is one of the companies given major buybacks. So keep this one on your watch. You see how it came way up there and got rejected. This might have been a company-inspired buyback into this week. So this is actually one that I'm thinking is going to fill that gap. So keep this one on your watch. We'll see if I'm wrong or not. The MACD is giving us a bullish cross. So that's something with if there's an absence of buybacks, that one could easily come back in. First Solar, we are seeing some really strong relative strength in our solar names coming in this week. Keep in mind, there's a lot of solar names like the biggest one, CSIQ. It's a Canadian solar company, and there's like 3 different solar names all reporting earnings this week, and that is probably likely why we have had a big driving force into those earnings. So keep in mind, this could very easily be a sell the news situation in the solar sectors towards the end of the week. Dick's Sporting Goods, I do not think the bottom's in yet. I think we are easily going to be coming back down to the $33 area after those horrifying numbers. So this is one, if you're looking for a short potential, Dick's Sporting Goods. I'm using log scale on my charts, so you can see how fast it can move in this range right here. Sage, this one here has FDA news coming out this week, so keep this one on your watch. This thing here is likely to have a big up or down move this week based on the decision. Another one, Jazz. It's got FDA news coming out this week. Let me get my notes right here. 1 second. And so keep that one on your watch. Also, that's Wednesday. Sage is Tuesday. They have their numbers coming out. And let me go over to my other chart. There's one other one which I forgot to put, save it here. LXRX. Okay, this one here, this one's a big one. Lexicon, they have a drug coming out for diabetes, and this is Friday. This one is a big one. I mean, they get some sort of approval on a diabetes drug, you can almost see a double in the stock if it were to go their way. So keep that in mind when you're dealing with these $4 or $5 stocks and you start seeing that type of information hitting the stock. But that does hit Friday on that one. Okay. See on my other charts, transports. I do not like how the transports tend to lead the markets. And look at this, we're just breaking out to the Qs are just, which of course, the tech's really got a lot of buybacks going on in tech right now. And I just don't like how the transports continue to underperform. We're under the 200-day moving average. We got FedEx reporting Tuesday evening. So, the consumer seems to be relatively good, but keep in mind, December was horrible on a lot of this stuff. And even the guidance out of Amazon was pretty sad. And when you start seeing Amazon with bad guidance, it makes you really wonder if FedEx is going to hold up here into their earnings, potentially driving transports lower. So keep that in mind. And then you have your Twilio. Looks like it's setting up, if the markets remain strong here, Twilio looks like it's setting up for a parabolic move higher. I mean, this is just unheard of what's going on here in Twilio. So I wanted to keep this one on your watch here. No, I don't. Team, that's another one of the software names up here in it's a rapidly expanding area for price. These stocks up here in this area, the prices can leapfrog real quick if they decide to start breaking out. So keep that in mind. Team on your watch. Okay. Look how prices can really start leapfrogging here. We're coming out of a very accelerated area, and it's kind of slowing down a little bit on our log scale. So this one here can continue to go up at a slower pace, slightly slower pace. Then you have, this is another one that we are in a rapid expansion. We're starting to head into a slower pace on our trade desk for the range move higher on our log scale. We still have plenty of rapid expansion area for workday here. It does seem to be overvalued, but we don't have contraction on our log scale price ranges yet. And then still plenty of expansion. We're still in the high move area for FedEx, so it can go either way. We still have rapid expansion to the downside if it chooses to go down. And this really, seeing what's happening in the transports, I am resolving to the downside for FedEx, officially putting in a head and shoulders pattern. That's exactly what I'm seeing setting up here in this market. So just keep that in mind going into those numbers Tuesday evening. And then my last one's Nike. And I've said for a long time, you see what's happening in Dick's Sporting Goods, and we've got all the issues with trade and stuff with China. I just think this thing here is completely overvalued for a retail discretionary. I said this last earnings season too, but it kept going. But my point being is that I do think at some point here soon, we're going to start seeing some significant pullback here. This is another one I think is a head and shoulders pattern, just on the early cusp of setting up here on Nike with all the trade issues with China. Okay, that's some of the things I'm looking at right here. But yeah, I think the markets can continue higher. There's room if they decide to go higher, but I am still leaning more to the downside. I think all these moves have been primarily buyback driven. And now that we're going to have 2 weeks, of dead time in that buyback period, we actually could see realistically true price action. What's supporting these markets here? So keep that in mind. I'm really concerned that this what we're seeing here is a blow off top more than what a lot of people are saying on a breakout to the upside. So thanks a lot, and I will see you guys during the week.